We're very positive on pharma and would urge investors to be overweight. With usual disclosures, I think we would like to go with the largest company in the pharma industry, that's Sun Pharma. We truly appreciate their specialty product strategy that's playing out well, and eventually it will form a very strong and I would say provide a lot of earnings visibility and change the entire dynamics of the company, which will lead it to even higher PE multiples. So very positive on that. Apart from that, at corrections 15-20% lower, we are keeping an eye on Mankind Pharma because of its domestic business. And then there's, of course, Kaplan Laboratories, one of our favorites in the pharma sector, which has a very unique business model because of focus on Latin America, and its US sales also are picking up very well. A disclosure, we and our clients are invested or may invest in all of these three companies.
Dipan, we need to slip into a break, but I want to ask you about the IPO frenzy because there are 5 listing today. And it'll be lovely to know your views on those as well. But stay on, we'll be right back with the pre-open session and a conversation on the IPOs for sure.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're just about a minute and a half out from the pre-open session. Just about, I think, three trading sessions left to wind down 2024, which has been overall, I would say, a pretty good year, ending at a bit of a rocky patch. And that really is the question. Deepan Mehta and Kush Bora joining us. Deepan, you know, this shows you the sign of the times, because right before pre-open, the question I'm asking you is not about secondary market, but primary market. Is this a frenzy? Is this the last big opportunity, or is this just pure madness?
No, I think it's not pure madness. It has not reached over there, but certainly you could classify it as a frenzy. And I think there are a whole class of investors, could be some of them are professional investors also, institutional investors who like this particular market, and they are constantly flipping over there as well as soon as they get an allotment. And that's bringing in more and more money because it's one of the most profitable, high yielding segment within the capital market just now, the way the listings are taking place. So from that point of view, money is continuously pouring in. These investors are sitting on huge profits as well and reinvesting in this particular strategy of applying for an IPO and then selling it on listing. And that's drawing more and more funds into this market. I think that this process will continue unless you have a situation where at least a few listings just tank and the entire circle changes. And I think that will be the point where you can be certain that the corrective phase has gathered even more momentum. What we are seeing just now is kind of sideways movement. For the market to plunge into further bearishness, you would need to see the primary market also getting a bit of a jolt.
Deepan, if we actually look at how markets have behaved in January, in the last 6 or 7 odd years, we have actually seen a considerable amount of change in the underlying, and that is the Nifty 50. And a 1.5%, 2% is very regular, a move on the Nifty, but you usually have a good 3.5%, 4% move on the Nifty to the upside or the downside, but at least for the past 4 or 5 years has been towards the downside. Well, keeping that into consideration, what is your expectation as we move into January? Because it also turns out usually to be a little bit of a pivot point, a fulcrum of sorts for how the year could potentially pan out.
Yeah, but see, I think the market is at an inflection point, and it can go either ways from this side, and that's very difficult to call because we have a very major event in 2025. That's the presidency of Donald Trump. And that's certainly going to shake up all markets, our markets included as well. And then we have a budget as well. And most importantly, we have an earnings season. So if the December quarter earnings season again disappoints big time the way the September did, then I think that the markets can correct further from these levels, maybe even 5-10% lower from these levels. But if the December quarter is generally in line with expectation, and if the investors get the kind of view that the worst as far as earnings slowdown is behind us, then you can see the market make a U-turn from here. So there are many ifs and buts. and we are entering into a very, very heavy news flow season. So I wouldn't want to stick my neck out and say which way the market is going. All I can say is that investors should be in cash and they should have a shopping list or focus on a few stocks which they want to buy, which they have missed out on, and just try and be light in the market, avoid all kind of leverage positions, and take advantage if there's any major correction which takes place.
You must have already covered this bit, but I do want to, get a better understanding of how things are looking up right now. Now, as far as FII positioning in index futures is concerned, that's standing around 18%, as low as 18%. But I also can, appreciate the fact that it's the, holiday season, which means the turnovers in general are not very high, and hence the positions taken are on a lower basis. But come the first week of January, what are the key factors that you would keep an eye on? And, perhaps in terms of levels too, that you think that could give you a better understanding, a better idea of the direction?
So, Agam, the broad range is set, which is 23,500 and 23,850 as we spoke. A very tight band, not much, 350, 350 points. But a break on either side will actually decide the trend or the trajectory. Just to answer your question as to, what are the key points that I'll watch for, one very interesting point or one very interesting factor to watch for is India VIX. Now, where there is apparent compression or lack of volatility, that we've seen over the last 3 years, interestingly, the VIX has actually spiked 6% yesterday. Now, is that a sign of things to come, or is that more of a technical adjustment because of the monthly expiry that transpired yesterday? I think we'll know today. If the VIX sort of cools off today, then perhaps it's more of a technical factor. If we see the index slipping lower, then as I said, that could be sign of things to come. And as you rightly pointed out, January is typically a high volatility month. And in in the most recent cases, it's been perhaps on the negative side. So we'll have to watch. For me, the key level on the Nifty is the November low, 23,200. If that gets tested, then there's a possibility that it can get breached as well. So I'll be on the watch out, in the month of January for that level. For the very near term, 23,500 and 23,850.
Just looking at this flash on your screen, where Ultratech has approved a 3.7 crore investment in Star Cement at a price of 235 rupees per share. Just let's pull up Star Cement if there's any activity in the pre-open session or not. And this is truly going to continue to be a big theme, about 4.5% up already. A big theme of 2025, I suspect, continuing in from 2024, is going to be consolidation in the entire cement space. And Deepan, I want to come to you on this. What is the strategy? I mean, fewer and fewer regional listed companies perhaps out there which need to be swept up by the two major players. But is this a play that you're looking at? What would be the companies that you would have on your radar?
No, Tamanna, we have zero exposure to cement. And,
why is that? Why is that?
I think that, the kind of capacity build-up taking place over there and the demand still remains single digit. For example, I think for 2024, it is in the range of 5% or thereabout, and that could move up a little bit in 2025. But there's just far too much competitive intensity. Valuations are rich compared to a typical commodity business. And no matter how much consolidation they take place, there'll at least be 5 or 6 large players. And they are on the way to increase their capacity like there's no tomorrow. And in a way, I think the price discipline which was there prior to the Adanis entering the cement industry, that entire price discipline has kind of got vitiated just now. So I'm not that positive on cement as well. You could have trading rallies, and maybe 2025 may look good optically because the base effect of 2024 is very low. From that point of view, sentiment may slightly increase. But look, we want to focus on businesses which we feel comfortable holding for 3, 5, 10 years or so. I don't think we have that comfort factor with cement.
Deepan, in terms of the banking sector, well, there has been some suggestion that there could be some more opportunity there. Firstly, between private and public sector, what is your preference? And in the private sector banks, would you consider just the large banks, or do you think there is opportunity in lower down the order?
See, first of all, I think banks will do well in 2025 because RBI is more likely to reduce interest rates or at least improve the liquidity in the system, and that will be very positive for banks. But most people are very, I would say, well exposed to the large private sector banks, they're kind of overowned as well at this point of time. I think that tactically, if you want to increase exposure to banks, it should be through the smaller PSU banks where there is still scope for Ps to get re-rated upwards and the business models have improved, the balance sheet quality has improved, and the growth rates also have improved. From that point of view, I'd go with the smaller public sector banks. But look, on a 3-5 year basis, I want to gradually be underweight banks because the competitive intensity has increased significantly. It's like a red ocean over there, and gathering deposits is not as easy now that the savers have many options, especially like mutual funds, insurance product. This entire financialization of savings has been detrimental to the banking sector because they are losing access to low-cost deposits, which is their basic raw material to maintain their net interest margins.
Okay, time for our brokerage call of the day. Motilal Oswal has maintained their buy rating on JSW Infrastructure and expects the company to grow at 19%. Rucha brings in more details on why this bullish call on JSW Infra. Yes, Rucha.
Thank you, Tamanna. Good morning. So yes, this is the top pick of Motilal Oswal for 2025. It has maintained buy on JSW Infra, revised its target price to 375 rupees, implying an upside of 21%. Now, why is this? Number one, business is well poised to surpass the FY25 guidance. So not only meet, but actually will surpass the FY25 guidance is what Motilal Oswal believes. It also believes that it has strong market share and therefore healthy market presence will support growth expansion along with its strategic location of ports will help support its long-term growth, and therefore the company's target of achieving 400 MMT by 2030 is highly achievable. It also says that it is well positioned to participate in government's active port privatization efforts, and therefore this will help the company going ahead. Strong balance sheet also would likely help the company to add new ports. Therefore, in terms of numbers, Motilal Oswal expects volume to grow at 14%, revenue to grow at 19%, and EBITDA to grow at 20% compounded annual growth rate over the next 3 years, that is from FY24 to 27. The volume growth drivers, however, could be expanding capacity, better third-party mix, as well as high utilization levels. So adding ports and the margin capabilities will help the company achieve the 21% upside which Motilal Oswal has given. But let's look at the stock price. Over the last 1 year, the company has given around 45% return to its investors, but last 6 months was largely muted for the company, around negative 2% returns. But we'll definitely watch out for JSW Infra over the next year, whether it is able to achieve the 375 target price which Motilal Oswal has given to it.
Okay, so JSW Infra, I mean, I don't know about what you're seeing interesting in the infra play, but I'm going to come to you on the cement question, Kush, and just on charts, if you look at the entire pack, and we'll pull up, of course, Ultratech and Star and see what's happening there as well. So 235 is the price that Ultratech is seeming to pick up, nearly a 9%, 8.69% stake in Star Cement. Any of these on the charts that you have a view on?
So they were starting to look attractive, especially Ramco Cements. We know there was almost a consensus buy, on this one on the street somewhere close to the, end of October, starting November timeframe. The stock's actually done rather well. Now what it's seeing is profit booking on the back of very thin volumes. So I'll be a little keen on Ramco Cements, not just yet, but once the fall stems, it's still under that profit booking mode. I think a good entry point for this one will be close to 950, 955 zones where a support zone comes in. So on the dip, Ramco Cements is looking attractive. Ultratech Cement, more of a consolidated move, but if you're looking at a 3 to 6 month kind of a horizon, then Ultratech Cement is starting to pick up steam. So this is the other stock that I'll have on my radar.
Yes.
So Ultratech Cement and Ramco Cements, these are the two that I'll have on my radar.
Okay. Ultratech, Ramco on the radar. Ultratech and Ramco on the radar, says Kush, as per the charts. But of course, this is the big story that we're tracking. What else is working this morning? Let's just take a quick look. Piramal Enterprise is up about 4%. Lemon Tree moving a bit. Jubilant Foodworks is the other one. I mean, Deepan, I don't know if you have a view on this Jubilant story, because when the news broke about the parent company's deal with Coca-Cola, it was seen as a bit of a negative. Now, today, of course, Jubilant Foodworks, the listed component, has outlined the contours of its engagement. And how do you see that?
I think that we are seeing a very strong slowdown in the QSR, the quick service restaurant business, and that's impacting Jubilant Food Works as well. And the management has gone and done overseas acquisitions, which has kind of driven the profitability on a consolidated basis. But I think a lot of it has got captured in the stock price. And I think existing investors may remain invested because this QSR slowdown cannot last for long. Eventually, I think the industry dynamics will catch up and you may see improvement in growth rates over there. But from a fresh investment perspective, I'm not sure that within the consumption space, Jubilant Food is the best stock to bet on.
All right. Well, speaking of Jubilant Food Works, let's take a look at maybe one or two other stocks which are actually impacting the QSR space in general, and by that I mean Swiggy and Zomato. Let's take a look at the charts specifically in terms of Zomato, because what's really happened is a little bit of a temperance, a moderation in its price movement ever since we've had the listing of Swiggy. Kush, what can you tell us about Zomato? Also, if you could also give us your view on Swiggy too.
Well, Swiggy is a fairly recent listing, so very limited data, so I'll have to skip that one. But as far as Zomato goes, well, while the medium-term structure of Zomato is looking very interesting, I think in the near term, some pressure cannot be ruled out. Now, it's taking the support at the 50-day moving average close to the 270 mark. What is actually a little concerning is the fact that now, since it's entered derivatives, right, the 300 level, which was technically anyway a strong resistance zone, is starting to act as a resistance from a derivative side as well, where you're seeing a lot of call congestion happening at those levels. So while you could look at it from a medium term perspective, near term I think let the stock settle. I don't think the fall that's begun is just complete. Wait for levels of 255, 260. That's where a good accumulation zone will come in, and that's when you can start accumulating Zomato. Overall bullish, but near term some profit booking, some pressure could persist, and 255, 260 zones look like a good level to start accumulating this one.
All right, so that's as far as a handful of names from the quick service, quick commerce space is concerned. But let's also take a look at some of these auto names right now. What we're seeing, at least in terms of gains yesterday, two names stood out. In fact, two names on the Nifty's top 5 gainers was, one of them was M&M. The other one was Maruti, but I'm going to talk about M&M because this is the one which has, it's not been without volatility, but it's been one of the relatively stronger ones in general from a longer term basis. Kush, your view on Mahindra and Mahindra?
Fairly bullish, but from a medium-term perspective, the momentum is missing. So there could be a possibility that you might have to be patient with this one. But a 6-month time horizon, M&M is the only stock that actually stands out in this space, in the passenger vehicle space. So from a medium-term perspective, keep it on your radar. Can be accumulated at current levels.
Okay. Just about 30 odd seconds to go for markets to open. Very quickly, Kush, is there a Star Cement trade this morning? First few minutes.
No, I'd skip Star Cement.
Okay, he'd skip Star Cement. Why am I talking about Star Cement? Ultratech is moving to acquire Star Cement. The cement wars continue, and with the next leg coming in, that's the big story this morning. But just about markets opening right now, what is it looking like? Remember, we're in for a quiet start as far as the implied open is concerned, and it's not half bad actually. About 90 points up. The Nifty comfortably above the 23,800 level. So those levels holding up after what has been a bit of a bearish trend in the markets. The Bank Nifty also not doing too badly this morning. Let me just pull up the heat map very quickly and give you a sense of what the mood and flavor is. On the losing side, Apollo Hospital, Britannia, just notice the winning and the losing range throughout is fairly narrow. Tata Motors on top, about 1% up. You're seeing some move in auto, and there's a DAM Capital note on autos today. We'll get that up shortly. Which is fairly positive on a sector which has not seen too much positive commentary recently. But Bajaj Auto now on top of that heap, about 1% up in a quiet market. That's not half bad. Some of the private banks also perking up in trade early morning. ICICI Bank, Indus in, Bajaj Finance as well. So it's autos, it's banks this morning. On the losing side, maybe some consumer names, a Titan, a Britannia, all of them moving out there. Otherwise, fairly quiet, I would say. Even breadth, not that great. Agam, Not too many bad stories, a little more action on the broader markets perhaps.
Yes, absolutely. But actually, it's curious as to how the broader markets could potentially pan out. So let's take a look at the indices right at the start and see where the mid-cap and the small-cap indices are in fact currently. So the mid-cap index is up around 0.4%. Do remember that over the course of the year, there's been a significant outperformance for both the mid-cap and the small-cap indices. And today, it does seem like the picture isn't very different, though the outperformance is not considerable. Now, at least as far as your sectors are concerned, we're looking at the auto sector leading the gains along with something like the private banking index, and consumer durables along with PSU banking index is also doing reasonably well. The only one in the red, in this marginally so, is the healthcare space. And even in terms of some of your relatively smaller indices, you have something like the Nifty PSU index, which is also up and about, as is the case for the Nifty Metal Index, which is also up by 0.3%. Let's bring the stocks then in and talk about which ones are in focus on the back of news, as well as a handful of business deals wins. So firstly, in terms of news, we have Jubilant Food Works, but do remember that Jubilant Food Works to a certain extent has already reacted based on the promoters buying stake into Coca-Cola India, and this is a related update coming through, which is why we have a 0.6% up move there. Puravankara, of course, on the losing end, but only marginally so. And SKF India on the back of the demerger, now up around 2%. But what about the handful of other players which are actually moving on the back of some deal wins? So Gensol Engineering up around 7%. Dixon Technologies signs yet another MOU, once again looking to move towards the mark of 19,000, and PowerMech as well on the back of an order win, up around 2.4%. Besides that, of course, we also have a handful of brokerage notes which will also be in focus, and among that we have TVS Motor Company and Escorts, and we in fact have brokerage notes from DAM Capital as well as MK this morning. And then we've seen a mention of these companies in JSW Energy as well, where Motilal Oswal continues to remain positive. But we're not seeing too much traction there except for something like Escorts, which DAM Capital sees some amount of value at this point in time. But that's what we have in terms of the broader markets, largely positive, and a tad bit of an outperformance too with respect to benchmarks, Tamanna.
Yeah. Okay. I think a lot of focus right now on, I would say, the cement space this morning. A lot of focus, in fact, on the primary market. But, markets aren't bad. You were talking about possibility of shorting the Nifty. It's 0.5% up, Kush. Just in the first few minutes. What is the strategy? What's the call on the Nifty this morning? Oh, sorry, the Bank Nifty. You were talking about shorting the Bank Nifty, which was about 0.5% up. The Nifty also not too shabby this morning. You said stay away from Nifty, possibly short the Bank Nifty. I think that's a bad idea right now. What would be the play on the Bank Nifty? Let me start with that.
So the Bank Nifty short idea was contingent on it breaking the previous day low because of the negative RSI divergence that we're seeing. So we'll wait and watch, and hence it wasn't an opening trade. You need to see how the trade sets up, right? So we're waiting it out. 51, 500, 51, 700. That's the range on Bank Nifty. So we'll wait it out, see if that is indeed taken out. Nifty actually isn't, while it does appear it is in the green, about 1/3%. But from a technical standpoint, if you see, it's still at that the 23,850 mark where it's opening up. The saving grace, even if it's been just 5 minutes, at open, the put base, right, at the 23,800 mark is starting to gather steam. So if that sort of adds up and we are able to breach this 23,850 resistance zone, then you could see some moves towards 23,950, 24,000 levels. Maybe not today, maybe in the coming days. But I think from a near-term perspective, that's the range that the Nifty is going to see. And that said, the Nifty is yet to break that 23,850 mark. So let's just wait and watch.
Okay. Let's just wait and watch. Anything you've picked up very quickly in the first few minutes of trade?
So, Taman, it's more of an update actually. Yesterday we spoke of 5-star business as the BTST trade with the first target of 807. Now the stocks opened, with good gains added on, some more after an opening of about 0.5% or 1% higher. The stock is now 2.5% up. The first target's been hit. Second target 831. So then the suggestion would be that since the stock is moving, it's not a bad idea to hold it with a trailing stop loss rather than booking out. So hold 5-star business. Yesterday we had initiated it with the first target of 807 and 831. Now you could place your stop loss near that, or rather the trailing stop loss near that 800 mark.
Dipan, what would be, we started by saying that you don't have any cement stocks. You're not looking at that space at all. What are you feeling about, so let's leave cement to one side, though the acquisition is going to be one big story this morning. How are you feeling about banks this morning? The Nifty bank roaring up, and I think private banks among those doing even better.
Yeah, as a medium to long-term strategy, I want to get underweight banks, but I think that there's a very strong trading play within the banking sector because in this maybe first half of 2025 itself, we may see interest rate cut. We may see the government taking action in terms of liquidity and additional steps to boost the economy, and that'll be very positive for the banks. But on a medium to long-term basis, we want to get underweight banks because of the highly competitive nature of the industry, which is taking place just now. And also the fact that this entire financialization of savings and the recapitalization of the PSU banks means that there's going to be a lot of pressure on the banks to maintain their net interest margins and to maintain their growth rates. So it's an industry which is, getting very much, I would say, commoditized. It's an industry which is getting into like a red ocean. So from that point of view, I don't think that we want to get overweight banks, but it's a cyclical industry as well. And I think that we are about to see an upcycle.
All right. Well, in the latest, what we understand from the cement sectors, more consolidation. And for now, Ultratech Cement, it seems, has picked up more stake in Star Cement. And we have Mihika who's joining us to give us an update on this one. Mihika, over to you.
Thank you for that. So you've seen Star Cement, it's up 6% on back of the news. So Ultratech Cement is going to buy 8.5% equity of Star Cement, which is a total acquisition cost of 851 crores. Now they're going to acquire 3.7 crore shares of Star Cement at a price of 235 rupees per share. And this entire acquisition is expected to be completed in 1 month. But it's a non-controlling minority stake that they are acquiring in Star Cement. When you talk about the calculations, the deal is done roughly at a valuation of $103 to $104 per ton. Now Star Cement has a total combined clinker and cement capacity of 10.47 MTPA as of FY24. When you see the breakup, the clinker capacity of as of FY24 is at 2.8 million tons per annum, while the cement capacity is at 7.67, and they've targeted a clinker capacity of over 6 million tons per annum for FY25 and a cement capacity to remain stagnant. Lastly, Star Cement has more of a presence in the east, which is somewhat of a little bit of a turn in terms of what we've been seeing in terms of the geographical trends of the consolidation theme in the Indian cement industry. The last few deals have been focused on the south region of India, but this one takes place in the east of India.
Thank you so much for joining us and taking us through the latest in the cement space. Dipan, I want you to come in on the electronic manufacturing services area. We've seen some staggering price action there, and of course, potentially for good reason, because of the kind of growth that all these companies are showing on a quarter-to-quarter basis. And firstly, well, I'd reckon, and I imagine that you would say that these companies are, extremely, richly priced. But at what point in time would you like to perhaps start nibbling into them at a 15% correction, 20% correction? Is that even possible with the kind of growth rates that we are seeing when it comes to the earnings?
No, Agam, you just have to keep that sector aside. It's just too expensive at this point of time. For a physical business with such a low operating profit margins, I would just avoid. I think it's just that there's scarcity of stock over there, and a lot of investors have kind of crowded that counter. But I would say that it's just best to leave it on the side. It's gone for the next 2-3 years, if you ask me. It's time to focus on the next EMS, whatever that could be. And I know you'll ask me the question, which is the next EMS, but I don't have an answer for that. All I can say is that in the last 1 year, 2 years or so, a lot of interesting companies have got listed. Platform companies with very, I would say, unique business models, operating in areas which are very niche industries as well. I think investors are best to focus on such new generation, new listings. I think the winners for the next 2-3 years will come from there.
Okay. I'm just wondering, Dipan, if you're getting excited by the whole quick commerce play. Zomato, Swiggy, quiet right now. in the last week or so, but otherwise this has been all the rage. You might have a third player who could go in for a listing next year as well. Do you think that this is a theme that continues into 2025?
Yeah, I think so. And investors will track how these businesses are growing and at what point they will turn profitable and at what point in which year they will be solid into the black and contribute in a very, very meaningful fashion to those companies. So I think it's a kind of a story which is going to be actively monitored. And from that point of view, it makes sense to have some exposure to either Zomato or Swiggy, but I would wait for a 10-15% type of a correction. As I said, I think that we are entering into a very heavy, news flow season. And if you do have a correction, then these are the kind of stocks that you want to focus on, the Zomatos, the Swiggies, and some of the new platform companies, the new listings, companies like Zaggle Prepaid, RateGain Technologies, and, Car Trade. These are the companies which I feel have got a very differentiated business model, which can scale up really well as well. And that's why I think we are focusing on a disclosure. We and our clients may have invested in these companies or they're on our radar and we are looking at investing in the near future.
All right. And let's take a look at perhaps, okay, so a handful of counters which are on my radar. And first one is Hardcore. Now, what's really happened at Hardcore is that in terms of price, we in the last couple of weeks, we saw it hit a low and then eventually recover. And it does seem like it's throwing a lot of in traders, investors, again, out of their long trades. What's the sense that you're getting here, Kush, when it comes to Hardcore?
Well, not too great. The stock had actually seen, as you said, quite a bit of a run, but it seems to be fizzling out. All the key averages, now are starting to act as a resistance. So I think this 245, or rather, this zone, perhaps, around that level, will act as a near-term resistance. So if anyone's got a long position, it's not a bad idea to perhaps, look at lightning, going light on Hardcore at the moment. If you're in this for a positional trade, then 220, that support zone will start acting as your stop loss. I wouldn't suggest initiating a long trade on Hardcore at current levels.
All right. Along with that, let's also take a look at what's happening in the defense space. And perhaps I can take a fundamental, slightly longer term point of view from Dipan as well. Dipan, a lot of correction of late in, the defense names, and to a certain extent, we understand that earnings from quarter to quarter have also been very, very lumpy, but that's also because of the execution on the various projects that they have. Do you find value in these stocks? And how would you compare a relatively larger name like Bharat Electronics as compared to some of your relatively smaller, more niche names, which are either in the Navy or, for that matter, something like a Hindustan Aeronautics?
First of all, I'd remain invested in all the defense companies, be it public sector or private sector. And in terms of increasing exposure, usual disclosure, we and our clients are invested very positive on Bharat Electronics and Hindustan Aeronautics and Bharat Dynamics. I think these businesses in a way are superior and perhaps a better traction as well. But I think they're not at that pure play, cheap valuation for you to take a very large bet on them. Sure, a correction has taken place, but still they're expensive from a point of view that what growth rates they can generate, and they're largely discovered as well. So from that angle also, I would just remain kind of neutral. If there's a further correction, then we may look at it again.
Let's take a look at 5-star because that's where, it was one of Kush's calls, and of course it's moved up significantly at the moment, up 3%. Kush, what do you do from here on?
Well, this is where you move that trailing stop loss higher. Earlier we recommended, but an 800 trailing stop loss, the stock's up about another 0.5% to 1% from the last discussion we had about 10 minutes ago. Not a bad idea to bump that trailing stop loss up to about 807, which was the first target, and continue riding this wave. The markets are doing their own thing, but the stocks actually gain from strength to strength, even if it's been just 15 minutes. So continue. 831 was the second target. Closer to that level, it's not a bad idea to book out, but for now, trail your stop loss to 807.
All right. And Dipan, how are you playing the healthcare space? Is it through diagnostics, hospitals, or, plain old pharma?
No, I think hospitals also have done well. And as a measure of disclosure, we have an investment in Apollo Hospital, and it's performed really well. And numbers also have followed through pretty nicely. So we remain invested over there. But broadly, I think they are pretty much expensive. Some new listings are interesting, like this Yatharth Hospital is there, Rainbow. Interesting companies, reasonable valuation, very focused type of businesses in terms of the kind of treatment they offer or the area they operate in. So there could be a few outperformers over there by and large. So I would remain overweight healthcare, because if the economy suddenly starts to slow down even further, then these are the segments, these are the sectors where you may still find a place to hide, and they may still be able to sustain their growth rates.
All right. Thank you so much, Deepan. Thank you so much, Kush. We'll take a very short break, but we're coming right back, not just with all the market action, but also the big story of the day. We've lost former Prime Minister Dr. Manmohan Singh. We talk about his legacy after this break.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So
Welcome back. You're watching India Markets Open, and I would say Bank Nifty is the hero of the day. Among the Bank Nifty as well, it's the private banks that are doing fairly well. It's been a strong day for the finance space. I would say financials, autos are the ones that are moving. IndusInd Bank showing an interesting breakout, just about 2% up. I want to see what the entire cement pack is doing as well. I mean, we talked about how Ultratech and Star Cement is the big story. Ultratech moving clearly to acquire Star Cement. As our analyst Mihika explained, it is a tad expensive, but at a lower rate than what they've paid per tonnage for India Cements, at least. So Star Cement at least 6.5% up right now on that acquisition spree. But meanwhile, let's look at the rest of the cement pack and what's happening there as well. And Ambuja and ACC and all of the other players today, as we focus on the infra play, those also up in the green. All right, let's just take a look at what's happening with auto stocks as well. Auto is the other big factor that we are seeing in the markets today. Auto stocks also roaring. There's a DAM Capital report which talks about how Tata Motors is one of its big bets. I'm also seeing a Bajaj Auto doing fairly well. And, what I found interesting, Agam, is that so far everyone's been talking about weak Vahan data for auto sector in the month of December, which is generally what you expect. No one really buys those cars right before the year of date is going to change.
Absolutely, spot on, yes.
But going forward, I think that realization is coming in that Jan and Feb might actually be a pretty interesting take.
Yeah, it certainly will be, and it's going to be an interesting one to keep an eye on as well, because well, let's not forget that there are plenty of more electric vehicles, new launches on display, and which is potentially planned for 2025, and a lot of that will come through in the first quarter, and much more on that towards the second half of the calendar year. So we're going to have plenty of other...
I'm just going to stop you there, Agam. I have with me former Finance Minister P. Chidambaram. Mr. Chidambaram, good morning. I'm actually taking you straight on air. So, we're talking this morning about the passing away of Dr. Manmohan Singh. And you are someone who has known him very, very closely in the capacity of your Prime Minister. You were in his cabinet, a political colleague, and his working style as well. Of course, deepest condolences to you today. And what are your thoughts on what legacy Dr. Manmohan Singh leaves behind?
He was ailing for a long time, and I was mentally prepared for the inevitable. But his passing away comes as a great shock and filled me with immense sadness.
I just want to understand, Mr. Chidambaram, when we talk about the legacy of Dr. Manmohan Singh, a lot of it is centered around 1991. That moment which changed, the destiny of India's economy. Today, we have a lot of people for whom 1991 means nothing. A lot of our countrymen and women are, have no idea of what the world was before 1991. Explain to us why this was such a pivotal moment.
1991 was a clean, decisive break from the past 40 years or so. Therefore, those who were born after 1991 have no idea of what kind of India we had before 1991. And there was one airline, one telephone service, and there was no choice of goods or services. And the state was all pervasive. And the state brought in the state's notorious inefficiencies and scarcities and shortfalls. So when I tried to explain to my granddaughter, who was born after 1991, she cannot imagine the India we lived in before 1991. That is natural. For example, many of my age and younger don't know what pre-independence was. So that's perfectly understandable. We have to include what changed in 1991 in our history, social studies, economics textbooks. Therefore, the unprecedented historic change that Dr. Manmohan Singh as finance minister brought about in 1991 is more widely known to the young generation and to the future generations.
In all your time working with him, and I mean, he was your boss in that sense, you know, in the Council of Ministers. What was his nature in terms of dealing with the politics and the job of governance? Give us any insight and anecdote, Mr. Chidambaram, into the man who was Dr. Manmohan Singh beyond what we all saw from the outside.
See, he was clear in his thinking. Apparently, he must have formulated a set of economic policies much before he got a chance to be finance minister and then later prime minister. But he didn't challenge the then government. He was economic advisor, chief economic advisor, RBI governor, UGC chairman during previous governments. But he didn't challenge them. When he got an opportunity, he did not hesitate to break from the past. And that he did with determination and careful planning. I remember in 1991, the opening in import-export control, in foreign exchange regulations, and industrial policy were tentative openings. We opened the door a little and a little more and a little more. But when he became Prime Minister in 2004, there was no hesitant opening. Once we decided that we will liberalize the sector, he encouraged us to go whole hog, which is why the 1991 to 96 period actually was more significant in terms of the decisive break, but the kind of reforms that were accomplished in the first 5 years when Dr. Manmohan Singh was finance minister pales into insignificance with the dramatic reforms done after 2004.
What would you say was, you know, your biggest memory and lesson, Mr. Chidambaram, from working with Dr. Manmohan Singh, just observing how he has dealt with, I'm sure, the great pressure of being in governance, being Prime Minister, the politics of it and the challenges of it?
I was with him throughout the 10-year period when he was Prime Minister. First as Finance Minister and then in between two spells as Home Minister. I don't know if any other cabinet minister for the whole 10 years survives today. I don't know. I can't immediately recall. One or two of them have left the party. But every time he had an idea, he would call the minister, listen to the minister carefully, and then formulate the policy in precise terms and encourage the minister not to hold back. Every time I went to him with a proposal, he would listen carefully, and then he will give his views. And once we agreed on the contours, he would encourage us to go full hog, not to hold back or to add ifs and buts. That's how we opened up the right to information, right to education, right to food, the Aadhaar, the rollout of the direct benefit transfer. And there was no hesitation, and there was no half measures. Once we decided something, we will go whole hog. For example, when we abolished the treasury bills, there was a clean break when we decided to allow foreign investors to invest in Indian bonds and government bonds. It was we went the whole walk, went the whole distance. That I think was a special quality, namely never to do or implement a half-hearted measure, a half measure. If you have decided something, do the measure in full. That is something which I appreciated and I try to follow.
Thank you so much for your time, Mr. Chidambaram.
Thank you. Thank you.
All right, that was former Finance Minister and former Home Minister P. Chidambaram talking about his experience working with Dr. Manmohan Singh, former Prime Minister from 2004 to 2014. In fact, Hemendra Kothari, Chairman of DSP Asset Managers, also joining us today for his thoughts on this somber day. Mr. Kothari, thank you so much for your time on NDTV Profit. I think what would be important today is to give a sense of a lot of people who were either not in the markets. We're a young population. A lot of our millennials, Gen Z, today have no idea of Dr. Manmohan Singh's contributions or his legacy. They know him as the Prime Minister from 2004 to 2014, not much else. What would you say to someone who's trying to understand who Dr. Manmohan Singh is?
Well, to my memory, first of all, Dr. Manmohan Singh came as a liberalizer. Apart from that, he was a very humble person. I had a chance to meet him when he was a UN Reserve Bank governor. And we had a function for a German bank which was starting and we were representing. He came with his wife in the dinner, simply sit down quietly and no any kind of fuss around there. That was the first impression which I had. Of course, I met him before. Then when he became the finance minister, I was the president of the stock exchange. And 1991, along with people like, of course, Chidambaram and Rakesh Mohan, who was an industrial advisor to industry ministry, they formed this liberalization of the budget. Now, that budget changed the whole picture, and today we are having the fruits of that benefit, what he did in past. And whenever a person I approached him a couple of times, and he was so humble. Even he used to come down when there is a small thing at his Prime Minister's office, where I had gone to that small function. He comes down and says, "How are you, Kothari Saab?" So this kind of humbleness and being a Prime Minister I always will cherish and remember. He was there in our stock exchange when there was a lot of crisis and problems were there, like pushing up through Harshad Mehta time. And he listened to me quietly and he put inquiry into the whole thing as such. So I think Dr. Manmohan Singh liberalization that time we were all talking about monopolistic kind of thing, amount of how much can you increase the capacity. So he removed all the restrictions he removed totally. And that made today India what it is. We are today must thank Dr. Manmohan Singh for what has happened so many years now, and where India has now looking at becoming a top 3 countries in the world for in economy and our GDP side. So I think we owe a lot to him, and we respect what he has done, and I'll remember personally my interaction with him. Thank you.
Mr. Kothari, just one more question, and the way you've described it is really beautiful. How Dr. Manmohan Singh was there for the stock market journey as well, the Harshit Mehta scam, etc. I just asked our team to pull out what the Nifty did between 2004 and 2014. It was a 376% rise. And of course, Indian markets have gone from strength to strength. From a capital markets perspective, what do you think are the contributions of Dr. Manmohan Singh?
Dr. Manmohan Singh also liberalized the foreign exchange, like GDR issues coming out from India, allowing the foreign investors to come in here. And I was one of the first one to raise the money for the companies in India as a merchant banker. And he was there, he created the total. Today's what we see, the foreign investors coming in, is thanks to him. You can say that. And today, the thought of Dr. Manmohan Singh, those days we are talking about 91, 92, so many years later also we remember him for the liberalization. I think that is a major thing which he did, and being humble is another one which is a major point of his, and listen to people very carefully.
All right. Thank you so much, Hemendra Kothari, for speaking with us.
All right, well, there you have it. But with that, we shift the conversation and talk about Blue Star, one of the biggest movers in 2025. And right at the top, let's get in my colleague Rucha to tell us a little bit more about why we're having this conversation and what a strong year it's been. Rucha, over to you.
Yes, thanks, Agam. So Blue Star actually manufactures air purifiers, air coolers and water purifiers as well, and as the largest after-sale service provider for air conditioning and commercial refrigeration products in the country. Now let's talk about financial performance. In the first half of FY25, the revenue has been 51,419, has grown about 25%. Net profit has grown by 71%. Now in terms of segmental performance as well, revenue of electromechanical project segment grew by 32%. Now this is a spectacular year for Blue Star, and if you look at the share price, well, in the last 1 year it has grown by whooping 112%, and in the last 6 months it is up about 22%. I just want to highlight quick new developments. The company actually focuses on new product development and also has decarbonization and energy efficiency actions taken for the OEMs. It also plans to introduce new models in the room air conditioner and commercial refrigeration segments. Lastly, talking about the future outlook, the company anticipates commercial refrigeration to stabilize post-October, that is in the second half largely. It has also maintained guidance of 20 to 25% of the top line growth and maintaining about 8.5 to 9% operating margin guidance for FY25. It is also it's also taking actions for the ongoing developments in the international markets, especially in the Europe and the US. Back to you, Agam.
Right, Rucha, thank you so much for joining us and taking us through that. And along with that, we have with us Mr. B. Thiagarajan. He's the MD of Blue Star. Mr. Thiagarajan, good morning. Thank you for taking the time out. Also, apologies, there was a little bit of delay in coming to you. But let me start by, one of those points that Rucha was highlighting, and that was your client's requirement to be more energy efficient when it comes to products. So in terms of that direction, what is Blue Star's current initiative? What kind of products are you looking at? Well, perhaps for this upcoming calendar year, and how could your mix change based on that?
Good morning. It's a pleasure interacting with you.
You see, air conditioners or air conditioning systems and commercial refrigeration systems consume a lot of energy. Next is they are also contributed to global warming because of the refrigerants. There are sufficient regulations in place within the regulatory framework. There is an energy labeling program which gets revised or upgraded once in 2 years. And there was Montreal Protocol. Subsequent to that, there is Kigali Agreement, and there is an India Cooling Action Plan. Blue Star, as its strategy, always believed in differentiated product offerings, and thereby we pioneered introducing products which are energy efficient. So as we move forward, as the market grows, you will be aware, India is the fastest growing market for air conditioning and refrigeration products. And we will be doubling the market size within 4 or 5 years' time. And if that is the case, it is important for the industry to work together with the regulators in order to improve the energy efficiency. In commercial air conditioning system, it is not only the product, it is also the building design. How much of green buildings will be brought in, therefore building design, how it can improve the energy efficiency. All our products are designed for energy efficiency or environment friendly, and we have been ahead of the curve in terms of meeting the regulatory requirements. Going forward, I think the energy efficiency norms will be further getting tightened. For example, in January 1, 2026, there will be another energy label change, and usually before 3 or 4 months ahead of that, the companies introduce the next label change products. So we are working on design and development of products, and not only meeting that 5-star energy label requirements, but also super energy efficient products.
Mr. Tyagarajan, then in that case, I understand that the second half of the financial year is seasonally slightly leaner one because of, course, the seasonality in the winter months. Still, if you could give us an idea about the kind of traction that you are seeing right now, and what are your expectations for maybe the period between January through March as well?
Excellent question. So we had a great summer season. The growth was more than 55%. The festival season for this product category was very good. The room air conditioners, it grew more than 30%. And that demand growth continues. While many other sectors are not doing well at this point of time, the air conditioning industry is happy that the demand continues to be good. Now, going forward from January to March, what generally happens is you begin launching products for the summer season. So there are multiple things that are happening there. One is the rupee depreciation, and the metal prices and other commodity prices are going up. So you need to balance profitability with the price hikes that are to be announced. Now, obviously, there are multiple levers there. You will redesign the product. You will bring in features which are in line with customer expectation. For example, going by the last summer season, consumers expect super efficient, heavy-duty air conditioners, which will perform even at 55-degree plus. And there are young generation consumers who need enabled, Wi-Fi enabled, state-of-the-art product. So India is a large market. You have to have products at all price points. You have to address the needs of various segments. Somebody wants durability, somebody needs technology, somebody needs at an affordable price. And all these actions will take place. And having said all this, my expectation
I'm just going to ask you to pause for a second before I come back to you. I just want to address this very quickly. What we're seeing on our screen right now is 5 IPOs listing today. It's just telling you the health of the primary market of them. And of course, all of them up in the green, showing robust listing gains. The biggest one, though, of course, is with the biggest subscription, 160% upside on a Mamta Machinery. DAM Capital also roaring away, a 48% upside this morning. Transrail, the other one that has seen some excitement, 34% up. Concord Enviro, 15% up, and of course Sanatan Textiles, 25% up. It's the season of the IPOs. There is no doubt in that. I mean, are these good long-term buys or not is a different question entirely, because, you know, data shows us that 50% of people who subscribe in IPOs do it for the listing gains. Well, listing gains galore and plenty today. No doubt about that. We'll come back with more details on the IPOs and of course all of that on your screen, but I'm going to continue my conversation with Blue Star B. Thiagarajan. Very good morning, sir. Tamanna here. Pleasure as always to have you on NDTV Profit. Great to have you here. Just wanted to get your sense of the demand situation, and I know this is the wrong time to ask you because seasonally this is not the time for demands for cooling solutions. You're saying summer was great. Since summer there are concerns about economy, about demand overall. Are you seeing any signs of that?
Not at all. Festival season, the growth was more than 30%. As we speak now, the demand is extremely good for room air conditioners as well as commercial air conditioning systems. And I was explaining, my sense is that despite the commodity price increase or rupee depreciation and certain price corrections will take place, I think Q4 demand also should be close to 25% as we build up for the summer. We continue to witness the consumers not waiting for April, begin to buy in the month of March itself. So therefore, fortunately, air conditioner industry is doing well.
All right, and Mr. Thiagarajan, would it be safe to assume that a growth rate about 20 to 25% can be on the anvil for Blue Star for even FY26?
I had indicated that we would like to grow faster than the market. We did that in Q2, and I suppose in the coming quarters also we will maintain that momentum. It is going to be a landmark year. But having said that, I told you, the headwind demand holds up because this category has arrived. But there are headwinds. There are headwinds in terms of rupee depreciation, commodity prices, and supply chain disruptions. And the industry is coping with this and trying to move forward and seize the moment and rise to the occasion. And Blue Star will do so.
Right. So, strong demand, but on the other hand, there is risks of supply chain disruptions and commodity prices. Under those circumstances, do you think that your operating margins could be around the levels of around 8 to 9% as well?
We had indicated that the segment 1 should be somewhere around 7 to 7.5%. Segment 2, we had indicated 8 to 8.5%, and that still holds.
All right. Thank you so much, Mr. Thiagarajan, for speaking with us, and season's greetings to you and yours from all of us here at NDTV Profit.
Same to you, Tamanna. Best wishes to you and your team members.
Thank you so much. Thank you so much. That was B. Thiagarajan, Blue Star, solid company. And yes, we'll be back in vogue, I think, from a market's perspective in the summertime. With the cooling solutions. Okay, our focus now for the next 15-20 minutes is clearly on what is happening with the primary market. I mean, it's quite insane. I want to pull up the 5 window once again. We have 5 companies which have listed, all of them on your screen right now: DAM Capital, Sanatan Textiles, Mamta Machinery, Transrail, Concord Enviro. If I look at it only very simply from the filter of listing gains, Mamta Machinery on top, remember, heavily oversubscribed. That's also because of the size of the issue. Manish Chaudhary joining us now. He's head of research at Stocksbox. Manish, thank you so much for speaking with us. How would you assess each of these?
I think the kind of response in the primary market in calendar year 2024 has been mind-boggling. The largest money in the primary market in India. And also, if I talk about the global exchanges, we are leading in global exchanges as well on the primary market. So my sense in the 5 IPOs which have listed today, I think Mamta Machinery has listed upwards of 150%. But if someone has got Mamta Machinery, I would be of the view that it is better to book profits at this point in time because the valuation looks stretched. At the upper price band, I think the valuation made some sense, taking account the 16x P on FY24 earnings, because 25 earnings is not a right metrics because the H2 is more heavier as compared to H1. So I think Mamta Machinery was the top pick from our side as well, but the kind of upside has already seen. I would advise booking profits. If I talk about other listings, I feel it's better to move away from Concord Enviro at this point in time, because I think the kind of financial performance and the kind of competitive intensity it is facing in the market, I feel it is better to take a back seat and at least wait for a few quarters to see the performance going ahead. So yeah, that's from my side.
That's a very interesting point that you made out there, Manish, because the area in which Concord Enviro operates in, that is largely with respect to wastewater management, and please correct me if I'm wrong there. And we already have a whole long list of companies which are also on the exchanges, which also deal with the exact same thing. So there certainly is a lot of competition. So Manish, if you leave out Mamta Machinery and Concord Enviro, the one stock among these 5 also which stands out is from the financial space, and that's DAM Capital Advisors. How are you assessing that? We're looking at a 53% premium to this issue price, but the scope, of course, the narrative here is, the financialization of the savings of India. Is that a theme here in this case, and what is your overall assessment of DAM Capital?
I think you have got this right. I think it's a proxy play on the financialization and the equity markets in India. So if I look from a longer term perspective, I feel that DAM Capital should do well. The idea being it has steadily gained market share in the merchant banking business, and I think currently it holds
Okay, we'll try and get Manish back, but not too shabby on the secondary markets as well. The Nifty above the 23,900 mark, up nearly 1%, and from its lowest point of the day has come up fairly sharply. Smart moves on the markets and you have to look at this relatively, considering that you've not really seen these kind of moves in the recent past. We talked about the Bank Nifty this morning. The Bank Nifty is absolutely roaring, 380 points now up. And I just want to pull up the heat map for you just for a second, very, very quickly, to give you a sense of what is working. It's not just the banks, the Nifty Auto. The Nifty Auto up about 2%. I mean, I haven't seen moves like that on auto stocks for a while. And that's what you're seeing, a Bajaj Auto, a Tata Motors, all of that really moving well this morning. Bajaj Auto up about 3% right now. Aisha, Samvardhana, M&M, the whole lot seeing green after a while. Now, what's leading to that sharp move in auto is really the big question that we need to answer. But even as we look at this, Manish, I want you, let's pick now. We've got 5 listings today. How would you rate them in order of preference from most favorite to least favorite?
I think if I want to rate it from the most favorite at this point in time, I think Mamta Machinery would be the top pick. But again, I would not suggest entering at current levels. I would wait for some dips to enter. I think the kind of customization it needs and the kind of proxy plates on the FMCG and the F&B space, I think that tops my preference. This second I would be DAM Capital. Third, I would rate mostly, I think, Transrail, because it's again a proxy play on the power sector where it is into the EPC of distribution and all. So I think Transrail, comparing it valuation wise, still holds value. So that would be third. Fourth would be Sanatan Textiles, and fifth would be, I think, Concord Enviro. Yeah.
All right. Well, Manish, we leave it at that. Thank you so much for joining us and taking us through your views on the latest listings. Also, in terms of the markets, want to point out that firstly, it's an expiration. It's a weekly expiration for the Sensex weekly options. Secondly, do remember earlier on, I was telling you about the fact that at least from an index futures point of view, well, FIIs are significantly short. And by significantly short, I mean 88% short and the balance are long, which means that if we do see a sustenance of the strength in the markets, please do not rule out a short covering rally this Friday. And also do remember that over the past 2 to 3 Fridays, things have been extremely volatile. And even in terms of direction, we're starting to see a lot more in terms of pickup. So that's something those are some technical parameters that you should keep in mind while trading markets today. But in general, of course, markets are looking good. And well, on that note, let's get in Jyotirvardhan Jaipuria. He's the founder and MD of Valentis Advisors. Jyoti, good morning. Thanks for taking the time out. Your view on the large caps. Let's talk about the large caps at the moment. How are you seeing in terms of valuations? Are they somewhere in the middle, slightly overvalued? Or what's the way forward, keeping growth in mind?
Yeah, so I would say they are slightly overvalued maybe. So if you just look at pure numbers, a 10-year average of PE has been 18. And, they are now trading at somewhere close to 19 and a half times. So slightly overvalued. So it's not necessary market has to always trade at averages or something, right? So to that extent, it's like maybe next year we get some sort of time correction, which will adjust this valuation. I think the key element remains growth, that whether the growth will come back. Our views growth will slow from what we've seen over the last 2-3 years. And to that extent, investors need to temper the return expectation. At the same time, we think growth will come for the large caps. We'll have earnings growth of around 10 to 11%. So probably, that provides the base for getting some sort of return. Just remember, we had 9 consecutive years now, if we include this year, of positive returns in the Nifty. So by law of averages, somewhere you are headed for 1 week here. But we are hoping next year we'll manage a small positive return on the market.
Mr. Jaipuria, very good morning to you. Tamanna here, and great to speak with you at a time when I think we are closing in 2024 in a bit of flux. No one's quite sure what's going to happen next. What should be the strategy now from your perspective as a seasoned investor who's seen so many ups and downs? What should be the kind of plan that average investors make, some of them new in the market, for the next 6 months?
So, Tamanna, I would say one is, keep your return expectation tempered. But what's happened is over the last few years, we've had returns which are abnormal. So don't expect a repeat of that sort of return. Just remember that returns somewhere do tend to average. Second is you have to start thinking a bit longer term, because it's possible next year is not a great year because the markets are just to extraordinary returns we got this year. Third is there could be a lot more volatility than what we've seen in the last few years. Because last few years have been a dream, right? Every small dip you bought in the market, you made money because the market went up after that. Fourth is, next year we'll see more macro factors come into play. It's like, one is obviously Trump starts his presidency on 20th of Jan. And there's a lot of uncertainty on what he does, because there'll be a lot of talk on what he's done, but nobody's sure what he finally does, because most politicians say something before they come to power, and when they come to power, they do something else. But otherwise, there are a lot of contradictory things he said, right? He wants to cut taxes in the US at the same time, keep fiscal deficit under control. He wants to, put tariffs there. But if he does that, then inflation will go up. So those are things which will play out. There'll be a lot of macro factors which play out. And so that is something they have to keep an eye on, because that's not really been one of the concerns for the last many years for investors.
Jyoti, you've been a keen observer in the healthcare space over the past many years. We've seen some resurgence in the pharmaceutical subsegment specifically. Of course, there's opportunity in the CDMO, CMO market. We also have the US Biosecure Act, where there is a lot of uncertainty around that. How are you assessing this sector, and what kind of areas are you looking at, or rather being interested in?
So we like the pharma space in general. And, one of the sectors we like is what you were speaking about, the CDMO, CRAM, that whole space. We think it's good because, we'll see some move away from China into India anyway. And India is establishing itself as a player. So I think, that is a segment which will grow and which will continue to grow. So a lot of companies here will become much bigger over the next 5 years, 10 years than what they are today. And so it's a sector we like. If the Biosecure Act comes in, and ours was irrespective of the Biosecure Act, we like the segment. If the Biosecure Act comes in, it will be an additional boost because a lot of people will be forced to then come to India who probably may not be looking at India as seriously. But the way we operate is always we can never time and forecast what government will do. So do we like the space irrespective of government policies? And then if the policy comes in our favor, then it's even better for us. So, that's one segment we like here. The other segment we like is actually the US generic space. So, the US generic space had done badly for the last many, many years. And it started to turn around a bit from last year. And the main reason is that the price falls now are very, very minor. So to that extent, companies are able to actually more or less maintain their margins or even grow a bit with volume coming through. So that is another space which we like. There's been a lot of erosion in value for companies supplying to the US generic market. And to that extent, we think this is a 2-3 year phase at least where these companies will do well. So those are the two spaces we like. We have not really been that bullish on the domestic pharma. We had some exposure earlier when we thought valuations have moved up quite a bit. So we've actually reduced our domestic pharma. But then these are the two segments where we moved all our exposure.
Mr. Jaipuria, that's the view on pharma. I'm just wondering how you're feeling about banking. I think has been one of the relatively less loved stories through the year. Seeing a resurgence today, but I'm not talking about it from a today point of view. Going into 2025, is it a back to basics kind of a view on banking? You go to the big storied players, whether private or public.
It's very interesting because the way we work, we don't really do momentum. Our whole philosophy is what we call the 3 U's. We do undervalued stocks which have underperformed and which are underowned. So banking is coming up on our screens quite a bit, and we started nibbling into banking for the last few weeks. One of the reasons it's coming up is when we do valuation, we tend to look at longer term horizon. So if you do a 10-year average valuation across sectors, banking is one of the 2 sectors which are cheaper today than they are on a 10-year basis. So both if you take a price to book or you take a P, banking today is cheaper than a 10-year average, and it's probably the only sector which is cheaper apart from media. So there are only 2 sectors cheaper on a 10. So to that extent, valuations are very cheap. The stocks have underperformed quite a bit. So to that extent, it's something which we started to nibble. We think, the banking space will do well next year. There are short-term challenges which we all know, there's some pressure on NIMs. There is, default or there's NPL risk in the MFI space. But, the stocks are pricing that to some extent. We think that the credit growth will be strong, earnings growth will be decent. So we like the large banks, but we also like some smaller banks which are trading at very low valuations. So, here valuations are like sub-price to book of 1 time, closer to 0.8 time, 0.7 time. And from here, money can be made if, there's a recovery in this banks, they're trying to clean up their books, and you get a re-rating coming just because you bought them very, very cheap. So for us, we are playing like both of them, some large cap, well-known banks and some, smaller banks, which are currently at pain, but we are trading at very, very attractive valuations.
I have a follow-up on to that one. You tend to veer towards unloved stocks as well. Well, does that mean that you are looking at some PSUs too in the banking space?
Yeah, so, we are doing both PSUs and private sector. And for us, our mantra is simple. Where are valuations? Where do we think, valuations could be 2-3 years later? And so it's a mix of PSUs and private sector. there are a lot of banks which get hit when there are 1 or 2 quarters of NPLs coming through. Then they get hit very, very substantially in terms of the valuation. And if we see a reversion coming to mean in terms of a lot of NPL provisioning is behind us, then we tend to go and buy these banks, because at some point they again trade back to their original valuations.
I'm wondering, and there's so many things I want to ask you, but because we have less time, I'm going to start by asking you how you're looking at the primary markets right now. And are you tempted to nibble into anything which is on offer? And I'm not just talking about the 5 listings today, but even in the recent past, there's a whole slew, many more lined up as well.
Yeah, so Tamanna, for us as a fund, it's like very difficult to participate in the primary market because, the issues are oversubscribed so much that, we don't really get any allocation. So it doesn't become worth our time. But, just in terms of valuation, what we find is a lot of the new IPOs are coming at valuations which are much more expensive than what the existing stocks are trading. And then they tend to trade at higher valuations for quite some time. But at some point, there will be like a reversion where, you have to look at the listed space and the new IPO in the same lens. And quite often, the existing listed companies tend to be much, much cheaper than what the new IPOs are coming at. So this is like a very broad brush I'm giving you. I'm sure there are particular companies which we like, which have got listed recently. But in general, we find that the IPO market is coming at high valuations, and because they're getting oversubscribed, the listings are happening at valuations which seem very, very high.
Yeah, that's an important point for our viewers also to remember, that look at the valuations, not just listing gains. That could be optically confusing or misleading. Just as we leave you, Mr. Jaipuria, your 1 or 2 big ideas for our viewers going into 2025? Which sectors, which kind of companies do you think we need to look at?
Yeah, so, our theme will be buy stuff which has not gone up. Don't buy the momentum plays of 2024, because typically if you do analysis, what does well in 1 year rarely does well in the year after that. So that's why, we've discussed 2 of the sectors which are probably our favorite sectors into 25. One is the BFSI space, especially looking at banks which are cheaper and which have underperformed a lot. And the second is the pharmaceutical space.
Thank you so much for that, Mr. Jaipuria. And with that, season's greetings to everyone on your end, from all of us here at NDTV Profit.
Bye.
Thank you. Thank you. Jyoti Vardhan Jaipuria. And I think that's a great message to wrap up on, Agam. Don't look for the same winners in 2025 as you saw in 2024. What does that mean for platform companies? What does that mean, for a lot of segments that have been outsized in their excitements? Pharma, I would add in that. Does this mean more of defense, more of rail? I mean, I wonder.
Yeah, absolutely. And of course, as a lot of the other experts have also suggest that, some pockets certainly are very, very expensive, but a lot of opportunity in certain others as well. But on that note, it's a wrap on this edition of India Market Open. Up next, you have Ask Profit. Stay tuned in, and we'll be back in just a bit.
I honestly believe that history will be kinder to me than the contemporary media or the powers. और की उम्मीद जो जानते नहीं वफा क्या.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Anushi Vakaria. We'll take you through the next 1 hour of trade. At the start, though, of this Ask Profit special, we've got an IPO special lined up for you, because today is a fantastic day for the IPO markets. You've got 5 listings that have taken place already, and what a stellar listing it is for a couple of them. In fact, let's take a look at how these stocks have reacted, making their Dalal Street debut. You have the likes of DAM Capital, you have Sanatan Textiles, you have Mamta Machinery, you also have a couple of others in the form of Transrail Lighting and Concord Enviro Systems, all of them trading in the green at the start. And Mamta Machinery stands out, gaining as much as 150 odd percent, in fact more than that at this juncture, 160% or thereabouts. Sanatan Textiles also listing at a gain of about 31%, coming off the high point just a tad bit, but still trading with gains of about 25%. Of course, we'll come to the market in just a bit, but like I mentioned, this is an Ask Profit IPO special. So in the event that you've got questions about any of these companies, or indeed the companies that have listed over the course of 2024, then I would invite you to write to us on that number that you see on your screen. Or in fact, over the course of this next half an hour, you can call us and we'll speak to you directly. But let me introduce Paresh Dattani, who's the chairman and managing director of the company Sanatan Textiles, joining in. Mr. Dattani, thanks so much for taking the time, and congratulations on a stellar listing. Help us understand at the start, of course this is well documented, but people who are tuning in for the first time, how are you going to use the IPO proceeds?
Morning, thank you for having me on the show. We have a primary issue of 400 crores and we'll be using 300 out of that to pay the debts. 160 crores will be paid of the current company debt, and 140 will be from the new debt we have taken for the expansion project which is on in Punjab.
Hi Mr. Dattani, this is Anushi joining in. Want to understand, so you've mentioned about in the use of proceeds that firstly the debt picture is something that we should be watching out for. Along with that, the manufacturing facilities. I want to understand what is the kind of interest savings that we can see from here onwards after the repayment of debt that there is on the cards. From FY25 picture, what is the debt scenario going to look like?
Well, today, when we started this journey, we were at a debt of 0.3 to EBITDA. We, at the end of 2025, we will be holding a debt of close to 900 odd crores on the book. When we finish the project, net debt after paying from the IPO proceeds, we'll be having a net debt of about 1,000 to 1,100 crores on the books. With the expansion coming in, 1 year forward, going forward, when the full project, the new expansion is on fully, we will be at a net debt to EBITDA as 1, which is very comfortable for us.
Understood. Could you take us a little bit through that expansion as well and the timelines therein? As I understand it, Mr. Dattani, it's not the best environment globally. You've seen exports decline as a percentage of the whole. Does that change over the course of the next financial year?
See, as far as Sanatan is concerned, on the export side, we have constantly moved between 5% to 15-16%, depending on better netbacks. If we are better locally, then we move the needle a little bit to the local. That's the variation that and I think going forward, we will be close to about 10-15% on the export front. As far as the expansion that is on in Punjab, we are adding, at the current capacity, we have in totally in all the 3 segments going forward, we have a capacity of 223,000 metric tons per annum. Going forward, out of this 223,000, 2 lakh tons is polyester filament yarns. What we are setting up in Punjab, we are going to set it up in 2 phases. On the first phase, which we'll be commissioning this year entirely, and we'll be adding 255,000 metric tons per year. And in the second phase, we'll be adding another 100,000 metric tons per year. So that will take us our total filament yarn capacity to over 550,000 tons. On the cotton yarn front, we are today producing 14,000 tons per annum, and we'll be adding another 10,000 tons to that.
Well, that's fair to understand, Mr. Dattani, but considering these capacity expansion and the export mix going higher, what is the revenue and the margin picture that we should be looking out for in the coming years?
As far as our Punjab expansion is concerned, ma'am, we are setting it up there because it's an entire market which is there, which is already there about 1 million tons a year. We are setting up about 25% of that. So it's a set market for us. We are already supplying to the market there, and we have a market which is ready-made, laid out for us. So nothing from there will be on the export front. But yes, going forward on the Silvassa plant, we will be increasing our exports. Whatever we were selling up north, we will push it to the exports and increase the export percentage share.
Just a last point that I want you to leave us with, just a picture of how the industry is likely to be next year. What is the kind of pressure that you have, if at all, on the pricing front? Will you be able to improve margins on that front? Is there any pressure that you are dealing with right now? Do you see that easing out in the next financial year? And is 26 going to be, or rather is 26 going to be better than 25?
Yes, we have been consistently doing, if you look at last 3 or 5 years, we have been doing an EBITDA of about 9.78%. We will be close to that this year, and going forward we are on course to improve our EBITDA. We are trying to work on that once the new project in Punjab gets moving along. And we hope to commission that. We start commissioning that by end of March, April. And it will take us about a quarter or so, or maybe a couple of months to ramp up the entire facility there. That will help us improve our margins also.
Fantastic. Mr. Dattani, exciting times for you, and congratulations once again on a stellar listing, and look forward to speaking to you in the new year.
Yeah, thank you very much, and I want to just take this opportunity to thank all the shareholders, and that only motivates us and my team to work harder in the future, and we are going to do that.
Fantastic.
Thank you very much.
Thank you so much, Mr. Dattani. All right, like I said, this is an opportunity for you to ask questions on IPOs. You can talk about the latest listing that we just spoke about, or any others. We've got Ashish Maheshwari, Director at DAM Capital, joining in, as well as Kushal Gandhi, who's Technical Analyst at Stocksbox. Thank you so much, gentlemen, for taking the time. Before we get into IPOs and a few of the questions that come through, very quickly, Kushal, I want to come to you on how the market's looking right now. Globally, we're seeing a little bit of a tepid scenario in terms of participation. What is a kind of picture that you have heading into the end of the year?
So far, the markets look muted. I'm not expecting much of fireworks as of now. Over the last 3 days, we've definitely seen some volatility compression. So we're seeing a positive outlook, as a result. But I feel 24,200 is a very critical resistance going forward. As far as we successfully and decisively close about 24,200, we might see an uptick towards 24,800. But again, markets have formed an intermediate top near 24,800. So I think 24,200 and 24,800 are two levels to watch out. If we are failing to sustain beyond these levels, if we fail to sustain above these levels, we might see some selling pressure continuing.
We've got one question coming in from Rajan Iyer. Rajan, I'll come to you in just a bit, but interestingly, it's being called 2024 is being called the year of IPOs, and the reason why is that we've had 1.8 lakh crore rupees that has been raised in mainboard IPOs in 2024, 95 mainboard IPOs during the course of the year, and that's quite a stellar number. Of course, considering the kind of participation that we've seen from you, the retail investor, it's very important that we get additional supply. And so from that perspective, it's a very good thing that we're seeing so many new companies coming through. We've got the first question, as I mentioned, coming in from Rajan Iyer. He's got AFCONs, which he got allotted during the IPO stage. He's looking for the prospects. Ashish, did you track this at the IPO point? Did you have a note out, or did you look at the coverage of this company? And if so, what is the kind of view that you have? Would you hold on for the next 3 years?
It's a AFCON's
infrastructure
issue was concerned. So from 420 rupees, I think, was the IPO price, and in spite of not that encouraging oversubscription which generally these kind of companies get, I think stock has done reasonably well. I think issue price was 463, and it came into the discount also. I think touched 420, but it's still now managed to do well, because ultimately the institutional investors are understanding the size of Afcon's infra operations is quite large. If you see typically wherever L&T bid for higher value contract, even Afcons is also one major player in the same segment, and they bid shoulder to shoulder with for larger projects. So fundamentally company is good, and in my view, if you are bullish on India infrastructure spending and particularly government spending, and Afcons will continue to do well. So my suggestion will be, if you are allotted shares in IPO, remain invested, and maybe next 1 to 2 years is a long-term very good growth story.
So a positive view that we are seeing for Afcons, the suggestion that one should continue to remain invested in this. Another IPO query, this is on the recent listing, today's listing in fact. Karthik from Pune wants to know if it's the right time to add more to DAM Capital. He got allotted one lot in the IPO. Ashish, coming back to you on this one. What's your view on DAM Capital? It got listed at a 39% of premium today. Should he continue to add into this position?
See, even if we see DAM post-listing, I think the still market cap is 600 odd crores. And the way we have seen other players in this segment, and let's talk about Nuvama Wealth, the kind of valuation, or Anandati Financial Services, the kind of valuation they are doing or they are fetching from the market, DAM will certainly do much better even from here, because they are having very good pipeline of IPO, because last year it was 1.6 trillion rupees IPO. Now